All right. Hello, everybody. We're going to give you guys a quick update on what is happening on the network and social side for Bitcoin and Ethereum right now. It's obviously been an interesting start to the week with prices declining, Bitcoin dropping back to about 60.6K and Ethereum a little below 4,300 at one point. And now we're seeing a little bit of volatility and kind of some polarization at these levels. So we're going to jump into a metric that we find very interesting right now, which is network realized profit loss. And we're seeing this recent dip here, which indicates that many people were selling at a loss on this dip. They were jumping ship based on this big retracement to almost below 60K, which struck a lot of fear in the community. What are you seeing here yourself, Dino?
Yeah, so essentially what this metric does, let's start with introducing how to read this metric, right? So net profit loss is a metric that tries to visualize the total ROI of all daily blockchain transactions. So what we do is for each unit of Bitcoin that moves on the blockchain, we take the price at which it was last moved, and then we assume this was its buy price. And then the next time that same unit of Bitcoin moves on the blockchain, which would be, let's say, today in this case, we take the price at which it was moved then, and we assume that this was its sell price. And so the difference between these two prices for all daily transactions becomes this metric. In other words, when you see a spike in net profit loss, it means that the coins moving on the blockchain, units of Bitcoin moving on the blockchain, are moving at a profit relative to the last time they moved, or they moved between addresses. So that seems to suggest elevated profit taking. And so today what you're seeing is a relatively big dip in net profit loss. What that means is that at this point in time, over the last sort of 12 to 24 hours, we are seeing a lot of units of Bitcoin be moved at a loss relative to the last time that they moved on the blockchain. So just keep that in mind and put that in perspective, really, because we're still at 60K. There haven't been too many days in Bitcoin's history that we were higher in terms of price action than we are still. So there was a 7% drop. And immediately there seems to be quite a lot of jitters in the sort of general network-wide holder sentiment. It seems like a fair amount of users or holders of BTC are starting to move their bags at a loss, suggesting sort of short-term capitulation, maybe some weekend capitulation. So overall, it's what I would expect to see on this chart, and I think is a good sign that we are seeing it. Generally speaking, when the market dumps like it did today, we tend to look for pain markers or indicators that the market is suffering and that the holders and participants are, experiencing anxiety and uncertainty and fear about the future potential of the coin. This is one of those pain markers. It seems to suggest that people have been fairly sort of shocked by this dip and are concerned about further correction. I already saw people looking at 50K as the next support. So generally speaking, we are seeing a little bit of volatility there, Brian, downward volatility from holders, which again, I think is expected and might be a good sign for the potential of Bitcoin to recover from these levels.
Absolutely. Yeah. Pretty much every instance of these negative network profit loss markers has resulted in at least a short-term bounce going back to, mid-October, where we saw a big, rebound here, saw a decent rebound here. This one was a little more flat. The lower it gets, the better, right? That's really what we're trying to look for, because these are the biggest pain markers here on November 4th, here on November 12th, and here on November 16th. So that's how we're looking for network realized profit loss. Why don't we move on to our next metric, Dino, which I believe we discussed would be MVRV.
Right. So I think this is a good way to visualize where what is the sort of general or average sentiment of Bitcoin holders and different groups of Bitcoin holders, right? So right now, Brian is showing the 30-day MVRV ratio for Bitcoin, which is an on-chain metric that tries to visualize the average profits, or in this case, actually average losses of all addresses that have acquired Bitcoin in the previous 30 days. So currently, what is that, Brian? I can't even see it on the chart. It's around minus 4%, I think?
Yeah, 3.6%, negative 3.6.
So that means that on average, all addresses that have acquired Bitcoin in the previous 30 days are currently down 3.6% on their initial investment, right? So they're below break even for the first time in quite a while, actually. They're below break even at around minus 4%. So the way that people use this metric is they look at historical trends. The higher the MVRV ratio is, the more unrealized profits there are, and as a result, the more risky it can be to enter into a trade, because you're entering into a trade against a lot of people that might want to be taking profits soon. And then on the flip side of that, the lower the MVRV ratio is, the more opportune time it could be potentially to accumulate a coin if you believe in its long-term fundamentals, because according to this metric at least, it is undervalued. Now, obviously, this is in no means financial advice. This is how some on-chain analysts use this metric. But Brian, show us the last, let's say, 3 years of data for the 30-day MVRV ratio, because generally speaking, the upper bound of the 30-day MVRV ratio is somewhere between plus 15 and plus 20%. So that would be sort of the danger zone, right? And then as far as the bounce back zone, or the sort of opportunity zone is concerned, we're also at around like minus 15 to minus 20%, where Bitcoin has historically seemed to bounce off of. So that's one potential support level that you might want to be keeping an eye on from an on-chain perspective. Now, generally speaking, all that you need to take away from this chart is that short-term Bitcoin holders, swing traders, are currently down about 3 or 4% of their initial investment. So then you need to ask yourself, what is the likelihood that they start dumping their bags at this point in time at minus 4%? I think it's relatively low, but that's just me. It could be. It obviously depends a lot on the general market conditions and the context of the current dump. But as we get lower, so assuming that we drop further down from these levels to maybe like 55 or 53K, the lower we get, the more undervalued Bitcoin gets according to this chart, and the more likely it is that we are going to see at least sort of a short-term bounce back. So I think we've been inching towards that danger zone for a while. I think a short-term drop was necessary for a lot of these metrics to reset and normalize. And MVRV, at least the 30-day MVRV ratio, is now sort of successfully reset. It can still drop lower, but it's looking better and healthier than it looked like 2 weeks ago, 3 weeks ago, and so on. And then if we look at the long-term MVRV ratio, it's still looking a bit iffy. So the 365-day MVRV ratio is still quite a bit in the positive zone, right? So this is showing the average profits of all addresses that bought or acquired Bitcoin in the previous year, 365 days. And you will see that it has also experienced a small dump today, but it's still sort of in the upper zone, right? So currently we're at what, Brian? That's like 30, maybe around 30% at the moment.
Yep, 30.4%.
Yeah, so that means long-term Bitcoin holders or longer-term Bitcoin holders are about 30% up on their initial investment. So then again, the question is, what is the likelihood that they start claiming some of these profits? And you need to decide for yourself. Obviously, on this chart, we are seeing that relative to bull cycle highs, we're still some sort of ways away from historical peaks, right? But we're also not undervalued. Like, there is more room to the downside for these metrics to completely reset and completely normalize. So some caution is advised. Like I said, the 30-day MVRV ratio definitely looks better and more hopeful for Bitcoin's chances of recovering from this level of price action. So I think we can, Brian, then move into some off-chain indicators, which I think a lot of people might be interested in, specifically what the crowd is talking about and how they are reacting to Bitcoin's crash, and then also looking at the funding rates, because I saw a lot of chatter about funding rates today on social media. So we do need to kind of at least give it a general overview. So what do we want to start with, social or funding rates?
I've got funding rate already open, so we can kick off here. What I'm seeing on the Binance side is that we went through a period of extreme greed, a lot of longs paying shorts in order to leverage long, really try to ride up the waves. And finally, we got these ticks here that occurred right around the all-time high that essentially fell off as soon as the price corrected. We are still seeing occasional excess longs going on, but as of now, as of at least the last 16 hours or so, the last 2 ticks I've seen from Binance, we are back to neutral, which is actually a good sign. This means that people are no longer trying to get greedy with their longs and trying to ride up an expected wave. Now, if we start to go into negative territory, that would be an even better signal, indicating that shorts are now paying longs. But as of now, this is at least a good sign in the fact that greed has died down upon this 7 to 8% retracement.
Yeah, so they're basically net neutral now. This is something that we've been talking a lot about during our weekly streams. So funding rates, it's a fee paid by one side of the perpetual contract to the other. When it's high, it means that Bitcoin longs are paying Bitcoin shorts and the derivatives market is long on average and vice versa. So this is one of the other metrics that I've been talking about when I said this dump was needed for some of these metrics to reset and to normalize. So like you see here on Binance, but it's not just Binance. We have seen similar things on FTX, on BitMEX, on Huobi, pretty much everyone except for Bybit. I saw a lot of people on Twitter suggest that this dump is not over until Bybit longs get liquidated and sacrificed to the crypto gods. So Bybit is still sort of positive in terms of funding rates, but generally there have been a lot of longs liquidated over the past 24 hours. In fact, I think around 800 million 780 million Bitcoin was of Bitcoin longs were liquidated right sort of immediately after the crash. And that was the highest sort of rate of liquidations since the October 26th bottom, right? So there was quite a lot of, it's another sort of marker of short-term market pain. Similar to network profit loss, where a lot of people seem to be now dumping slightly relative to the last time that they acquired their coins, they're dumping at a loss. We're also seeing a similar thing in terms of funding rates. They are now dwindling down, and we are seeing a sort of move into net neutral position on a lot of different high volume exchanges. There's still a few exchanges that have high funding rates, so keep an eye on those. There's still some long positions open that might crash this party further. But the lower we get in terms of funding rates, similar to net profit loss and social sentiment, the more the market is feeling the burn, is feeling the pain, the more it is becoming uncertain about the future. And this is, generally speaking, at least we from Santiment like to be at a place where nobody is safe, nobody's concerned, and a lot of people are panicking. So when we can't start to dump and decide to enter the market for the time being, this is where we might see capitulation end and a short-term bounce back for the price of Bitcoin. So another relatively cautious sign, although you do need to keep an eye on it because the funding rates have not normalized on all exchanges. So keep that in mind.
And it's worth noting that on the FTX funding rate, we're in negative range for the first time since the end of September. So give or take about a 6-week low, and that's quite notable.
Yeah, so let's look at social metrics as well, Brian, to just see what the community impact was, or sort of community response was to this dump. So what we're looking at right now is we're looking at the social volume for Bitcoin. Social volume is a proprietary metric of ours. It essentially shows the number of mentions of BTC on crypto-related social media channels. So we track about 1,500 of these channels. These are Telegram groups, crypto subreddits, Twitter accounts, and other sources of information. So we compile the amount of mentions of Bitcoin from all of those channels, and we show it across the price action of this coin. So what we're seeing is we are seeing, Brian, a little bit of an uptick, right, in terms of social volume. But social dominance seems to be still relatively low, right? So social dominance is a metric that shows the amount of mentions of Bitcoin relative to the amount of mentions of other top 50 cryptocurrencies. So where are we right now, Brian?
Yeah, so on social volume, Dino, you're absolutely right. We are seeing a climb. I made it just on the 1 day to give you guys more of a macro look. But if I zoom in here to, let's go with just a 4-hour interval, you'll see a more noticeable uptick, right? This is a 200 candle average, 30-day candle, or 30 candle average that's showing the average of the last 34-hour candles. And you can clearly see the uptick, showing that the trend is really at its highest since June in terms of social volume on the 4-hour scale. And that's a big deal. It means that people are definitely getting polarized, discussing whether we're about to have a much larger dropdown, or conversely, a increased interest in buying the dip, which we've already noted in one of our insights yesterday, is a pattern that has started to occur. So social volume is rising, while social dominance, interestingly, is dropping rapidly, indicating that the percentage of Bitcoin discussions is falling compared to the top 100 market cap crypto assets out there. So there is still much more interest in altcoin performance, which has been mostly negative over at least the last 3 or 4 days since this retracement started. And until we see Bitcoin's social dominance begin to rise, it might be a bit of a concern because it means that people aren't really paying attention to the dip of the coin that really controls the prices of everything else right now. So that's my take there, Dino.
So let's also, so the two metrics that we're showing right now are only showing the total amount of mentions, right? So we're not really seeing here what the crowd is talking about, whether they're bullish on Bitcoin's dump or whether they're very, very scared. So there's a metric that we use to figure that out. We call it social sentiment. Essentially, what we do with this metric, or how we calculate it, is we take all of these mentions and then we run it through a machine learning algorithm that labels all of these incoming mentions about Bitcoin as either positive, negative, or undecided. And so this is the result, this chart here. So what we've seen up until the crash is we've seen a rising sentiment towards Bitcoin, more or increasingly bullish sentiment, right? And Brian, you can also show very quickly the Ethereum weighted sentiment, which was even higher. Actually, Ethereum sentiment was sky high before the crash, suggesting that there was a very, very strong positive reaction to Bitcoin and Ethereum's price action over the last month. Now, is that a good sign? Typically, no. So typically, and we talk about this in all of our insights and weekly calls. So generally speaking, when we see a price appreciate, while there's also, or when we see social metrics start to increase while the prices appreciate, that typically points to peak market euphoria or increasing an irrational confidence in a coin. And as a result, the retail sector in particular feeling very, very greedy and very optimistic about what's going to happen next. So generally speaking, based on some of the backtests that we've done, these elevated social metrics, when they coincide with rising price action, can sometimes coincide with local tops and periods of price consolidation. So this is another metric that I was talking about when I said this dump was needed for some of these metrics to reset, to normalize. So let's go back to Bitcoin real quick. So you can see there was a pretty big drop in Ethereum related sentiment, but what's going on with Bitcoin? And right there, you see over the last 24 hours or so, really like ever since the dump, right? You see a pretty significant decrease in the relative sentiment towards Bitcoin. It's still bullish slightly, because it's above that zero line, right? It's still sort of relatively bullish, but it's no longer predominantly bullish like it was just 24 hours ago. So I think the market has certainly stopped with shilling, at least for the time being. We are now moving back into sort of this undecided territory, less optimistic than we were before. It's very similar to what we're seeing in terms of funding rates. So from increasingly high funding rates suggesting more and more longs and generally the derivatives market getting long on average, we are now seeing a decline in movement into undecided. So, I mean, I would still much rather see us be very bearish, like where we were in July, before I can say, okay, we're clearly a reset and the retail excitement is completely gone. I don't think it's as easy as just one sort of 5 to 7% dump to completely eradicate all of this euphoria, but I think it's a good start. So generally speaking, I would like this, similar to the MVRV chart, to drop even lower. In order for that to happen, there might need to be another correction, but we're moving into the right direction, at least with some of these overvalued or inflated metrics. We're moving back into neutral territory and hopefully even undervalued territory over the next couple of days to tell us that finally this sort of rising euphoria about Bitcoin and the rest of the crypto market is laying low, so that we can have a more sustainable breakout afterwards. Right, Brian?
100%. Yeah. The ideal times, as we can see here, are really, the mid-August to early October negative spikes that we saw most recently, and even going back to mid-June to mid-July, these were the sustained negative sentiment stretches that really indicated that there was a lot of pain and doubt going on with Bitcoin. And those are the ideal times to get in. All things considered right now, we're at least close to neutral, but as Dino said, it would require maybe a little more retracement, potentially even below 60K if that does happen, to get us into negative territory. Or we might just pop right back up, which is very common after this level of a retracement for the short term, and then we'll start to see a little bit of euphoria again.
All right, so let's talk about whales, right? Because if you've been keeping track with our weekly market streams, we were like one of the most concerning metrics that we shared in the last couple of weeks was this whale chart. So what Brian is showing right here is the total holdings of addresses that have between 100 and 10,000 Bitcoin, right? So very large Bitcoin addresses. Their total holdings have declined over the last really 2 to 3 weeks and have declined fairly significantly by about 120, 130, I think even almost 1,000 Bitcoin at some point in time. So it was a pretty strong signal that some large Bitcoin addresses might be looking to offload parts of their bags. Now, keep in mind that alongside, and we talked about this, so I'm not going to talk much. You can check out our previous weekly report for more information about this. At the same time that we saw a decline in this group of addresses holding Bitcoin, there was an incline or an increase in the number or amount of Bitcoin held by 10,000 BTC or addresses holding more than 10,000 BTC in their wallets. There are very few addresses holding that amount of money, only 84 addresses holding more than 10,000 BTC. So the fact that they are increasing in their holdings might very well suggest that these addresses are predominantly populated by centralized exchanges, and as a result, it's actually pointing to increased sell-side pressure. So whales still, for the time being, seem to be, at least based on like pure on-chain data, these addresses seem to be decreasing in their total holdings. Last 2 days, though, at least we're starting to plateau. So what I would really, really like to see in the next couple of days is I would like to see these addresses show us any intention to buy the dip. The way that you would see this is by, just generally keeping track of this metric and seeing a relative slight but ongoing uptick once again in the total holdings of these addresses. For now, they have been sort of warning us for the past couple of weeks that they are looking to maybe de-risk a little bit, maybe reduce their exposure a little bit, and they have done so. So probably among all of the on-chain metrics that I've been keeping an eye on, probably the most concerning one over the past couple of weeks. The question now is what's going to happen next? Like, are these whales going to continue to offload, or are they going to start moving in the other direction, the direction that we might want them to take, right? Depending on whether you're long or short on BTC. So, yeah. Brian, anything to add here?
Nothing really. We're at minimum kind of flattening out. So it's good to see that the whales aren't continuing to dump for now, but we're going to have to see what the next move is.
Exactly. And so the last thing that we want to talk about is just network level metrics. All right. And these aren't going to be affected much by this dump. So we just want to look at sort of the monthly trends, bi-monthly, even maybe a yearly trend in terms of two network level metrics for Bitcoin. So the first one being daily active addresses and the second one being token circulation. So let's start with daily active addresses, right? Daily active addresses, it's a metric that shows the total amount of unique addresses that are interacting with BTC on a daily basis. So we have seen throughout the last 3 to 4 months, we have seen a continuous uptick in these addresses, especially when you look at the moving average. I think that's what, 7-day moving average that you've
It's a 30-day, yeah.
Okay, 30-day moving average. So generally speaking, after the May correction, there has been a massive decline in the network level activity for Bitcoin. I think the amount of addresses interacting with Bitcoin has dropped by like 30% between May and June. So, I mean, Brian, you can even show it if we zoom out a bit to like the last year of data. That drop was gigantic. And we have like slowly but surely started to move our way up again. So the question now is, I think we're sort of at a very important crossroads here. So the price has dumped, right? It's not a massive dump, but it is a dump nonetheless. So my question is, what is going to be the network level of response here? Are we going to see once again the amount of network-wide activity start to die down, which we have seen during several previous dumps, which would suggest that on average people are becoming sort of holders are moving back into dormancy, and there's less value being created and transmitted on the network on a daily basis, which might, from a fundamental perspective, be a negative sign or a negative omen for Bitcoin's price action, because generally speaking, sustained price rallies often seem to go hand in hand with sustained uptick in network activity. So the more addresses interact, the more new blood is coming into the network, the higher the network effect, or the greater the network effect, the more there is some type of justification, fundamental justification for a sustained rally. So Bitcoin's network addresses or network activity has been moving in the right direction for the past couple of months. The question is what happens over the next 7 to 10 days. Are we going to see network level activity start to decline once again, which might be a concerning trend, or are we actually going to see network level activity continue to move up, even though the price is now down or continues to consolidate? So if that happens, I think that could be a potential bullish divergence. It obviously all depends on a lot of different facets. But if we see Bitcoin's price continue to drop or even consolidate at these levels, but network level activity continues to move in the upward direction, I think that's a hopeful sign for Bitcoin's short-term future and then short-term price action. And then if we see network level activity decline from here, that's a little bit more of a worry, right? And so, Brian, we also might want to check this from a different perspective with token circulation, right? So daily active addresses show the total amount of addresses interacting with BTC, and token circulation shows the total amount of unique tokens, Bitcoin tokens, that are moving on the blockchain daily. So here we're starting to see a little bit more of a decline over the past 3 to 4 weeks. Generally, the trend seems to be slowing down after a period of increase. So, Brian, we have this model that tracks sort of the dynamic between the price of Bitcoin and the circulation of Bitcoin, with the idea being that the higher the circulation, the better. And if the Bitcoin's market value or capitalization, okay, let's go step by step. So what Brian is showing here is our NVT ratio model. So the NVT ratio is a metric that tries to visualize the relationship between Bitcoin's market cap and circulation, or the amount of unique units of Bitcoin moving on the blockchain daily. So the formula is very simple. You take the market cap of Bitcoin and you divide it by unique token circulation. So what happens is if Bitcoin's market cap or market valuation is too high relative to the amount of value being transferred on the blockchain daily, then this is going to show a red bar. And if Bitcoin's market cap or market valuation is too low relative to the amount of network activity, network level activity on a daily basis, then this is going to flash a green bar. So Brian, market valuation has fallen for Bitcoin over the last 24 hours, actually quite significantly. So what is Bitcoin's NVT model showing as a response to that?
Yeah, so it's very interesting. If you tuned into our This Week in Crypto call on Friday, you would have noticed that we were actually starting to see a semi-bearish bar, which we last really saw in September 2020. But due to the fact that prices have dropped off, this is, of course, the average price per day. So that's why it still looks like it's rising when, in fact, the current price is below 60.5K at the time of this recording. That price retracement has caused the amount of stagnant circulation that isn't really rising right now to still catch up with the market cap, which has fallen about 7 to 8%. Therefore, we've come back into a semi-bullish bar, which is a good sign. And this particular marking right here was yesterday as the big drop was happening, showing that it was actually a very good day on the NVT scale and is what allowed this bar to come back below these trend lines and be a semi-bullish indicator once again. So all things considered, we're about halfway through November now, and we have a better than average sign that circulation is justifying where market cap currently sits.
All right. I think that's we don't want to drag this call for too long. We just wanted to sort of give a short, quick overview of some of the metrics that we're tracking. I think generally speaking, there are positives to be taken from this dump in terms of the fact or the way that it has impacted some of the metrics. So specifically, I'm talking about Bitcoin's MVRV, Bitcoin social metrics, and funding rates. All three of which have started to move back down and normalize, reset. However, they could still go low or sort of dump lower. So Bitcoin's MVRV ratio is still sort of lower or sort of higher than where we necessarily would like it to be. Social volume or social sentiment is still relatively bullish. Funding rates are moving to a neutral territory, but on a few exchanges like Bybit, they're still up. So there are sort of remnants of bullish sentiment still in the market. I don't think that the bullish euphoria has been completely shaken out, but it's moving at least in the right direction. The fact that whales are still not accumulating is a little bit concerning, but on the other hand, network level activity is still looking okay. So keep an eye. Stay safe out there. Be careful. It's still a relatively volatile time. I would not be surprised to see another drop off from these levels in order for all of these metrics to really sort of, in order for market to feel more pain. And these metrics are going to show it. But we are seeing some amount of pain and panic already. So yeah. Keep an eye on all of these charts. I think we're going to put links to all of them in the description. So when the video rolls out, if you're missing, if you're watching this maybe 12 hours later or something, go to the site and make sure to check out what they look like right now, because they might have changed. I think there's going to be quite a lot of interesting activity on network side and off-chain side in the next couple of days. So you want to keep an eye on these charts. Anything else before we end, Brian?
Just want to remind everyone, we've got another This Week in Crypto call coming up on Friday, so we hope to see you there. It's at 2 p.m. UTC, and we should be getting into all of these metrics we covered and more, dependent on exactly how things shake out over the next few days. So see you guys there.
All right. Stay safe, guys. Yeah. Talk to you in a couple of days.